Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Ain't Seen Nothing Yet, because I think some of the biggest moves of this entire bear market are still ahead of us. And last week I called it, slow roll. I do think we are slowly rolling over. Now that we got the Fed out of the way, we got a bunch of economic indicators that came out, readings came out this last week. They are all out of the way. And what happened here with this last week? We closed below the trading of the last 4 weeks, the prior 4 weeks, on both the Dow Industrials, the S&P 500, and the NASDAQ Composite. So in this video, I'm going to focus on the Dow Industrials, the Russell 2000 ETF IWM. I'm going to look at 3 key indicators that I look at. I look at several, a lot more than 3, but I'm going to look at 3 of them today. And then check in with the Bloomberg Commodity Index, gold and silver. All right, so here we are with the Dow Industrials. They're down 556 for the week, and the S&P was down, what was it, 82? And the NASDAQ Composite was down 299. So again, nice strong reversals in here. That's what it looks like. But again, just like anytime you have a reversal type candle, you need to see follow through. Okay. And we got the follow through coming off the August highs. So now are we going to get it here? I think we are. And that's what we're looking for. So let's, well, before I go to the Dow, let's take a look at the Dow Industrials and the Dow Transports. And you'll notice when I keep saying the Dow, if I say the Dow and I'm not very specific, I'm always talking about the Dow Industrials. So this little divergence, I think, is telling. And we did not come up, the transports did not confirm the push that the industrials had to a higher high here in November. And this was a part of a big flat that you'll see in just a minute. Transports weren't down that much at the end of the week, only down 24.78, but you could see they were a whole heck of a lot higher at one point, and they gave it all up, and they came right back down and closed down 25 points for the week. So that is the picture there. This blue line here, that's the 200-week moving average on the Dow Industrials. Notice how we came below it slightly, kind of got support. Now this is also a zone in here. Let me look at that bigger. This is a gap that hasn't been closed on the weekly. And where's the bottom of that gap? That is 28,430. Let's round it. 28,432. 28,432. That's like 6,300, almost 6,300 points below where we below the high. But here we are, 32,920. So 28,432. So what is that? About 4,500 points down to close that gap. Break the low, break the October low, which a whole lot of stocks are already starting to do, and close the gap. And then we're going to be on our way down fairly strongly, I think. Okay, let's go back and focus on the Dow Industrials. Okay, here's that weekly picture I just showed you, and here's the gap I just talked about, and here's the reversal, minus 556, and on Friday it was down 281.76. So Friday we had triple witching, a lot of volume, a lot of options and futures that were being closed out. And now we've got the week after, and we're getting into the end of the year, holiday. Wouldn't be surprised to see the volume a lot lower as we get into the end of the year in here. But right now, it looks to me like the Dow Industrials have rolled over. You can see we've got a little moving average cross. The 10 exponentials crossed down below the 21 simple. And it looks to me like we are heading south. The Elliott Wave pattern that I've got in here is that we were working a big flat sideways type move in here, and it turned out to be an expanded flat. Why? Because we had the B wave go below the start of the A wave. Here's the ABC, and we had the C wave end slightly above the end of the A wave. So it turned into what we call an expanded flat. So now, what's the next move? The next move is intermediate wave 3, and that to me looks like what we've already started our way down in. Okay, so now we're looking for the first, you just start all over. I mean, you're looking for 5 waves. So what we're trying to do is flesh out what? The first minor wave. And that first minor wave is going to have 5 minute waves within it. I think what we're doing right now is we're trying to finish off the first minute wave. Now, the thing to remember, what's going to be different about intermediate wave 3 versus intermediate wave 1? Intermediate wave 3 cannot be a leading diagonal or anything like that. It's got to be a classic impulse wave where wave 4 does not overlap wave 1. And I'm talking about the minor waves in here. And the other thing that's going to happen is you're going to see intermediate wave 3 should be a lot stronger than the downdraft and the moves that occurred in intermediate wave 1. Okay, so now let's just take a quick look down. And I'm looking at the 130-minute chart. Here's what we're looking at. I've got a dash line right here at the end of wave 4 within the C wave. And I'm talking about, here's what we were trying to figure out is where was the C wave of that ABC, where was it ending? And so here's the 5 wave count that I had in here. Sharp pullback for wave 2, sideways messy wave 4, no doubt in here. And then we got this spike up that occurred with the high that occurred on December 13th with the CPI. And then now we're heading south. So this picture right here, I'm just not sure if wave 4 is finished in here. I do think that this is wave 3, and let me drill down and look at the 65-minute. Here's why I'm saying that. I mean, look at the RSI and how we peaked in here. The low reading is right here on this wave 3, a nice little 5-wave move in here. So this is my take on this. We'll see whether wave 4 wants to push up a little bit higher even. But then if not, if this is done, and you can see how, the bears tried to get control on this a little bit, we're going to come back down and then we'll finish off minute wave 1, and then we're going to do what? Minute wave 2. We're going to pull back up into here, and then we'll go down in minute wave 3. So that's the way we've got it on the Dow Industrials. Let's take a look at the Russell 2000. Okay, this is IWM, the Russell 2000 ETF. So it was down 1.31 on Friday and down 4.25 for the week. So I think I talked about this last week. So this is kind of an update. And right now, look what happened this last week. So here's the last 5 days. We closed on the 9th of December right here. We got the little spike up Monday, Tuesday, and then boom, we just fall right out of bed the last 3 days and close down hard in here, coming down hard. Okay, so again, we see 1, 2, 3, 4 close below the trading of the prior 4 weeks. Almost got 5 weeks or 6 weeks, got really, really close. So, pretty strong move. It's interesting, the Russell 2000, IWM, has been leading the other indices to the downside, really. I mean, it's been the weakest. I mean, when did it peak? Back here on the week of November 7th, I believe this bar is. The week of November 7th. And when I say that, I'm always talking about the Sunday, November 7th that started that's the way my data is right now. Just like right here, what is this? This is the week of December 11th, okay? So that's the picture that we've got. We're working our way down, and I think we are in minor wave 3 of intermediate wave 3. And this should become very, very strong in terms of the moves to the downside, in terms of the downdraft. And then what are we looking at here? The wave 2 became a kind of a complex WXY. And what is a WXY? A WXY is connecting 2 corrective patterns, in this case, 2 zigzags. And so we were looking for a push down below the X wave, the end of the X wave, to kind of confirm that, okay, we're headed south, and that's the way it looks to me. Like we are on our way. And so then the real question is, what do we have going on in that type of move? And this is what I think is happening. And so we're trying to flush out at least a minuet level wave 3 as we're working our way down in terms of the wave structure. But that is where we're at. And that is the picture on the Russell. And it's just a continuation of what we talked about last week. Okay, that is it for the indices. Let's take a look at some of our indicators. I'm going to look at the McClellan Oscillator first. Okay, this is the data that feeds into the McClellan Oscillator calculations. And so Thursday, Friday, we had negative breadth. And so I color-coded red when the advancing issues versus the total is less than 33% of the total, and vice versa, green when it's 67% or higher. So 2/3, 1/3 or less. And so you can see I'm looking for extreme readings, and then I keep a 10-day moving average of it because that also gives me some other signals that I look at. So the McClellan Oscillator, we are sitting at -166. Let me go to the picture and I'll show you if I can get it to pull up here. There we go. -166. So we are extremely oversold. Now, we can get a whole heck of a lot more oversold. Look what happened in September and into October. And it's happened numerous times during the year, this year. So yeah, we've pulled down. We're starting to stretch that rubber band. Where did we come from? We were up here dead neutral on the 13th. Dead neutral at 12, so just barely above the zero line. And the divergence that showed up and the divergence that was very telling occurred back up in here with these extreme readings, but it wasn't confirming the market move to the upside, just like it didn't confirm in August. But this was a heck of a lot bigger divergence that showed up. And then the Summation Index, let me get the picture in for you right here. It has rolled over and it's heading south, just like it did back over here in August. And we'll watch and see how fast does this come down and break the zero line and put the selling in control in here. The Summation Index again is kind of a sum of the McClellan Oscillator, so it kind of gives a little bit different picture. But you can also look for divergences and things like that. All right, so that's the picture from the McClellan Oscillator. Let's see, the next one I want to look at is the percent of stocks above their 50-day moving average. I think I wrote down something else here. Hold on a minute. Okay, here we go. Percent of stocks above their 50-day moving average in the S&P 500, and here's what I'm looking at right here. Okay, so when we get above 90%, you are at an extreme, okay? Just like when you get below 10%, you're at an extreme. Well, back over here on November 30th, December 1st, and December 2nd, we got above 90% for 3 days. In August, we had 5 days. And now we've rolled over, the moving averages have crossed to the downside, and it looks to me like we are heading south. So, nothing is ever a straight line, but this to me is the direction. I wouldn't be surprised to get something like this as we are heading to the downside. So we're sitting at 57% of the stocks in the S&P 500 are now above their 50-day moving average. A little bit of a change from where we were back over here on November 30th at 92%. All right, so that is telling. Another one I like to look at here is the 52-week new highs. So 52-week new highs on the New York Stock Exchange. I'm sorry, not new highs, new lows. New lows at 181. It's a new high for several weeks. But yeah, we're starting to make this turn just like we made this turn back over here in August. Again, I keep referring to August. We're coming off, that rollover very similarly to what happened back then. So what am I looking for? I'm watching to see, do we start to get these kind of spikes? We should be taking out these kind of readings at, 192, or let's see, it closed at 265. Here it closed at 547. We closed on Friday at 181. So right now it's acting and telling us that this is what is starting to occur in terms of the damage that's starting to be done with new 52-week lows on the New York Stock Exchange. Okay, that's it for the indicators. Let's take a look at commodities. I'm going to look at the Bloomberg Commodity Index. Okay, the Bloomberg Commodity Index on a weekly basis was up 98 cents. Okay, so little doji type candle in here. But I tell you, the thing that strikes me, number one, we've broken this trend line, and what we've been doing, we've just been kind of going sideways, right? But the other thing that looks to me, when I look at this, is you could say, well, looks like a little bit of a descending triangle. And if this is the case, then it's going to be doing this and breaking down. And if it does that, breaks these levels in here, where would I expect it to get support? Right in here. Okay, so that's why I'm watching. Yeah, I'm looking for oil to continue to sell off, but you know, gold and silver also. I mean, let's take a look at GLD. GLD was up on Friday. It was up $1.44. And here's the weekly view right now. I continue to hold a bearish view on gold and silver because it's just, that's the way it's been acting. We've gotten a little counter trend move, but based on what I'm seeing in here, the divergence showing up, the wave count we've got, this ABC zigzag, I just think that this thing has most likely run out of steam. We'll see if this continues to come down. And so, you know, what I love about the Elliott Wave is that you have a pattern that you carve out, and this should be the path forward, and you look for the price action to confirm or deny it. Okay, so that's what we're looking at right now. The expectation is this is going to come down, and it's the same thing on silver, SLV. Now, granted, it was a little bit different picture, Daily in here, we had this ABC move. And this isn't lined up right here. I'm not sure why that is. There we go. But see, now it's still messing with me. Come on, a little cooperation. There we go. Okay. So ABC, and I think this little 5-wave move for the C wave is done. And, you know, we're getting the divergence at the tail end of that and watching for this thing to come down. Now, it did get extended. When I look at C versus A, of this move, yeah, it got pretty extended, well over 200% of A. So, but I mean, can that happen? Yeah, there's no rule that says it can't happen. So this is the picture on silver, and I continue to watch for it to work its way down. Do not look at these and say, oh, Joe's projecting that it's going to be here within a certain time frame. No, this is just a path forward. We're going to take one wave at a time. Okay, unless I specifically tell you that I'm making a projection, this is just a path forward on the chart. Okay, so that is it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button and head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great week. And oh, by the way, I should have said this at the very beginning. There will not be a video next weekend on Christmas Eve and Christmas weekend. So everyone who's celebrating Christmas, please have a wonderful Christmas. And I know there are many other holidays going on also. Please have a great holiday week and weekend into the end of the year. And we'll be back on the, right now I'm targeting the 31st. All right, everyone. Talk to you on the next video.